morning, everybody. Can you hear me? I hope so. Happy, what's today? Wednesday? Hump Day. Welcome to the morning show. Stock Market TV. Spencer, Steve, JC, Alfonso with you this morning. What are we talking about? All right, today we're going to get to Steve's talk about Asia. We didn't get to that yesterday, so we'll definitely get to that today. I'm sure we have some gold charts. Actually, I'm not sure. I'm guessing we have some gold charts. I don't really know. We talk about gold a lot now, so. Tesla is interesting to me today. What else is interesting to me today? Coinbase. I mean, Bitcoin, obviously, right? What else is new there? As pointed out by Alfonso just a few moments ago, have you seen copper today? Interesting move. Interesting move. Let's see. Who is the guest? Sonu Varghese. He is Ryan Dietrich's partner over at Carson Wealth. Will be on the show at 9. He brought some great charts for us. We'll have Mary, our very own Mary Thwaites, on at 9:30. Talk about what she's trading. And that's what I got. Good morning, chat. I hope you are having a good day so far. Let's get the show on the road.
All right, are we back? Are we live? Are we good? Uh-oh, someone's showing his chest hair. Oh, you know it's a bull market when the chest hair comes out.
Nothing wrong with that. Nothing wrong with that.
How much Strazza chest hair were we seeing in the bear market? Can I ask you that? No? Strazza's on.
Oh, wait, Steve, we can't hear you.
Oh, hold on. So we get his chest hair and we don't have to hear him? That's the ladies are going wild now.
The chest hair is always here. All markets. This is all market chest
Once
hair.
he starts talking, see, he was so much more smooth when it's just the chest hair and he's quiet. Yeah. So much more smooth. Once you open your mouth, you ruin it all.
I wish I could do these shows without talking. Wouldn't that be nice?
That's what she said. So, ladies and gentlemen, it is officially Wednesday.
Yes.
It is. We're almost halfway through the week. You know,
almost halfway through the month, JC.
Almost halfway through the month. First quarter almost over.
Yeah.
Little quick. No, they're moving fast. Time flies when we're having fun. You know, I can't help it when I go to the zoo and I see the camels. You know, I just start yelling, right? And then, you know, my daughter starts doing it too. Right? She just starts going, hump day. Like, my daughter doesn't get why that's funny. I think it's funny that she does that.
I would love to just get to oversee this. You know,
it's hilarious because at the Cape May Zoo, they got the camels with the double humps, and then they got the single hump camels. It's wild. It's great.
They have multiple humps. Like, some have more humps than others.
There's different kinds of camels. It's just what it is.
Crazy.
Camels are awesome, dude. Why don't we talk about the market? Who doesn't love camels?
I don't know. We could just talk about camels for the next hour. That's cool with me. I guess
we need
not.
We need a hump day.
I will get us a hump day sound. That's a good call, Steve.
Can we can you slack me the deck? Oh, yeah, can you slack me the deck on I don't have it. Let's do a quick little rundown while we do that. Dow futures are flat on this beautiful Wednesday. S&P futures are also flat on this beautiful Wednesday. NASDAQ futures, however, down 1/3%, down about 56 handles there. Bond futures down again. Bonds have been front and center as far as I'm concerned. You know, it really stood out, Treasury bonds in the red yesterday. That continues today. Silver up 60 basis points, gold flat, copper up 2% this morning. Who mentioned that? Sergio, shout out Sergio, mentioned in the copper, up 2%. Crude oil also up 2%. Is that a coincidence or not? That's a big question that we've had for quite some time. Dollar mixed, you know, with euro up a little bit, yen down a little bit, dollar mixed across the board. Nikkei continues to be rejected after getting back to that 1989 high. Who would have thought that would still be resistance? As it turns out, it is. And volatility index hanging in there just under 14 with the U.S. 10-year yield back above that key 415 level, up near 4.2% on the US 10-year yield. Over in the funny money, you got Bitcoin up 13 hundo this morning, hanging out just around 73,000. Ethereum holding that 4,000 level, up 1%, about 46 points. And I know Spencer Israel is always chopping at the bit to find out that total crypto market cap.
If I had to guess, I would guess 2.6 something.
2.662 trillion in market capitalization. We were doing some math the other day, and if gold stays at this price, which I don't think it will, for Bitcoin to catch up, you're looking at about $1 million of Bitcoin for the market caps to equate. About $1 million.
I don't follow. You're saying Bitcoin would have to be $1 million?
Bitcoin would have to be $1 million to catch up to the market cap of where gold is today, roughly, give or take.
All right,
ballpark.
Well,
about $1 million. It's just under. I think it gets it to like 960 billion or something.
So like next year. So like next year we're talking about.
I don't know. I wish I knew.
Yeah.
I don't know
right.
if and when Bitcoin is going to reach that key level. Maybe it never does. Maybe it does this year. Maybe it does next year. I have no idea. But for those, when people talk about, oh, it's going to the moon, and then I wonder what the price of the moon is.
Yeah.
$1 million seems like the right price of the moon, because it's not just a pretty round number, although it is a pretty round number. There's actual some fairly logical math. Anybody have any it's kind of silly. It doesn't actually matter, but something I've been thinking about lately. You guys think I'm crazy? Doesn't matter?
No, it doesn't matter. Also, I think we discussed this a little while back as far as what the moon is, or where is the moon, at what price. I forget what we decided, but
and then
we definitely discussed this.
Also, which moon? Like, is it the Earth's moon, right? Or is it Neptune's moon, or is it Pluto?
Well, no, we agree. We decided what is mooning. The verb to moon. What does that mean? But I don't think we discussed it.
I moon, you moon, we moon.
Sure, whatever. Okay. Hey,
mooning should be 100%. And like,
that's what we said. That's what we said. Mooning is that, but we didn't say at what price you reached the moon.
Does Uranus have a moon?
But there's not a price. There's maybe a market cap, right? Because some of these cryptos have 5 zeros in front of them. Some of them are trading for a couple $100.
Yeah.
It really is a little bit annoying when they have 5 zeros in front of them. Come on, Shiba Inu. Is that really necessary?
Why they do that. It is kind of stupid.
They do it to screw with the TradFi people.
Dude, it's like a stock with 5 letters in its symbol. It's like,
well, sometimes they have to do that. Okay, I got a few things that I want to talk about today. First of all,
I have a fun stat, but I'll go after you.
Okay. So Goldman Sachs, first chart there. I mean, I know we've mentioned this before, but this continues. It's trading like it got acquired. No?
This one,
it's crazy, isn't it?
I tried it. It was absolute bullshit. This thing's just stuck sideways in like a $10.
What does that mean? What does that mean by you tried it?
I was long.
You were long, and you
just a few weeks ago
you had a time stop, basically, essentially, because you didn't get stopped out to the downside.
No, that's absolutely right. Wells Fargo was working so well. JP Morgan was working so well. This one's just stuck sideways, so I was out.
Anybody have on why this is trading in such a tight range like that? It's, isn't it? No?
Excuse me. No, I got nothing.
Sounds disgusting. That's gross, man.
Let's think.
You need to see a doctor. That is nasty. Nobody cares?
No, I do care. I am interested. I'm
Isn't it kind of like nobody cares that this is kind of like it literally trades like it got acquired?
Shout out today's morning show brought to you by Goldman Sachs Wealth Management.
I'm interested in this chart. I just don't know why.
I'm interested in it because of just the trading action. Like, this isn't, as somebody who looks at as many charts as I do, and Strazza for that matter, there are very few people in this world that look at as many charts as I do, and I could probably name who they are, and they're friends of ours. I just don't see this.
Couldn't this just be? Hold on. Couldn't this just be a reaction to the fall, right?
All of what?
The season, right? Like November, December, right? The end of the year there, we had that epic rally, and this is just consolidation.
Oh,
After an
he's
uptrend.
Well, to be fair, Spencer, that is what it is, right?
Yeah.
Yeah.
That's
Okay.
exactly what it is. In fact,
Sure.
The start of this mess was on December the 14th, which is the day that the new highs list peaked, which is the day that Apple peaked. So what you said is 100% right.
So
now,
why does it? Yeah.
With that being said, this consolidation is so tight and so consolidated. It looks like it got acquired. Like you're right, but still,
like 3 weeks ago, the Bollinger Band width was at like a historical extreme. I can't imagine where it is.
Where is it now? It probably still is.
I'll pull the chart.
Yeah, do that. Can you run that? Can you run the Bollinger Band width there?
Yeah, I'll do it right now. So this is most unusual.
What's a Bollinger? Is it a 20-day SMA or 21?
Yeah, I'm using the 22.
22.
So,
is it SMA or EMA?
20 period, 2 standard deviations.
Is it an SMA or an EMA?
It's an S.
Are you sure?
Yes.
I haven't taken a CMT exam in a long time, so I just press the button. It comes up.
Listen, this is unusual, more within the context of what its peers are doing. The Big Six Bank Index more or less been cruising higher while this has been stuck sideways.
It's just odd. It's just striking. So I just wanted to start there. How about this one? Look at slide 3. These are consumer discretionary stocks on a relative basis, continuing to push down against new 52-week lows. Made a new intraday 52-week low yesterday before a little afternoon reversal. Historically in healthy market environments, you see consumer discretionary outperforming. You see, right? These are stocks where consumers spend a discretionary income, right? So a lot of Amazon, a lot of Tesla here, of course. Amazon, I think we've all discussed, is a great barometer for the consumer. Tesla, probably not so much.
Every time you show this ratio, you should show the better one that's equal weighted and looks a lot different, because I think we're just getting, this is silly.
We're looking at maybe, but we live in a cap weighted world.
Okay.
Do we not?
If you think
I'm with you.
If you think this is better information than the equal weighted one,
it's not that it's better information. It's that it's different information. If you think that looking at an index where Tapestry Incorporated is the largest weighting, and that is a better gauge of the consumer than Amazon being your largest weighting. Hold on, maybe is it maybe the Mohawk Industries as a third largest component?
So how much larger is the first largest one from like the 10th largest one?
0.2%.
Yeah. No, 0.5%.
Right. So, yeah, great.
Listen, the answer is we look at both. That's the answer. That's always the answer.
Mm-hmm.
It's just interesting that this looks so shitty. That's all. Considering it's been the opposite, like your entire career. Literally. Like, how you talk about how gold has sucked your entire career? Well, your entire career, this line has been going up. Literally, your entire career, this line went up. And then all of a sudden, over the last couple of years, it's just been going straight down.
Outside of like a brief period when the market was bottoming late 2022, early 23, Tesla's at its lowest level relative to the S&P in like 4 years.
Yeah. And then I got another one. I got this. This is a good one. Look at slide 4.
Yep. Nice job, Grant.
It's a great chart because here we're looking at the, to me, the new 52-week highs minus new 52-week lows, like that just doesn't seem very helpful, like ever. Not in downtrends, not in uptrends. Like that just seems like a very unhelpful data point. However, when you go deeper down in shorter time frames, I actually think it adds a lot more value. Here we're looking at the 10-day highs, 10-day lows, 21-day highs, 21-day lows, 63-day highs, 63-day lows. 21 days is about a month, 63 days is about 3 months, 126 days is about 6 months, right? So that's why we use those numbers. One thing we'll notice is that there aren't any large numbers here in any of them, right? We're not really seeing a lot of, we're middling around. And to quote Josh Brown.
Hold on,
let me finish, and then you can address it. Josh Brown, many years ago, he wrote a blog post called, I think it was called like, tops are a process, bottoms are an event, and middles are a motherfucker. right? And people are always looking to call major tops, call major bottoms, but the truth is most of the time the markets are somewhere in the middle. And I think this kind of shows that, like, we're just middling around, like perfectly normal, right? Stocks are almost never at a top and almost never at a bottom. It's almost always somewhere in the middle. And I think this is a good representation of that.
We're in the middle of an uptrend.
Bull market, you mean?
Yeah.
Yeah,
Okay.
yeah, of course.
Not to be confused with like, oh, this is the data's mixed here. This is like a range bound situation. No, this is a bull market situation. New highs, easily outnumbering new lows across the board. It's been that way. It's been that way for more than a month now.
I was gonna say a year and a half.
We took a little breather coming into the beginning of the year. Then we picked things back up, and it's been an excellent.
No, that's not true at all. There were no new lows at the beginning of this year.
No, the first week of January, there were actually.
Really? How many new lows did we get in the first week of January?
We had like 3 or 4 nasty days coming into the year.
Or maybe like 10-day lows, maybe spiked a little bit. You mean?
It's just a little bit, and then since then, breadth has been.
I feel like it wasn't even that bad.
Listen, market internals have been great. They continue to improve. Big improvements in Q4. Gave a little back after the breadth thrust, December 14th, I guess. Gave a little bit.
There was a bunch of them in mid-December.
Yeah. What?
There was a bunch of them in mid-December.
Yeah, December 14th, I think, is the one I care about. And now we're back, right? So breadth has been steadily expanding. Market internals continue to improve. New highs continue to outnumber new lows. More and more groups are completing primary trend reversals, whether it's biotech, some of the ARK funds, the IPO index, right? We're seeing laggards finally join this bull market party. The cryptos are mooning. Risk appetite outside of your market cap weighted XLY SPY ratio continues to show us the green light. So everything's really just
large cap tech, small cap financials. I mean, there's areas that are not working. By the way, which
isn't that normal? Isn't that normal?
Yes, exactly. Which is my point. My point is yesterday, who was making new highs yesterday? Consumer staples were making new 3-month highs. Energy was making new 3-month highs. Consumer discretionary certainly was not. Technology was not. There were a lot of sectors that were, industrials were not, right? So all I'm saying is that we're seeing, to Strazza's point, there are laggards that have been turning the corner, that have been showing up to the game. We're seeing new types of names on the new highs list than we saw last year. It's not the market that we were in last year, and it doesn't have to be the market that we were in last year. That's fine. Markets evolve. Like Spencer just said, I hate to keep giving Spencer so much credit, but yes, it's perfectly normal. Yes.
I have a question about that last table. Would it be valuable to not just look at like absolute highs and lows, but also stocks that are within, I don't know, 10%, 5% of a high or low?
We used to do that.
Yeah, I know we run those numbers. I don't really find that very helpful.
Because you got to draw a line somewhere. Like the new highs data is not perfect. A lot of people will do the new highs on an intraday basis. We at least do it on a closing basis. So there are slight nuances and decisions that you have to make around this data, which will make some people's numbers or some data providers' numbers different from others. I get it, Spencer. It's like, if this is within 1 or 2% of a new high, do you count it as a new high? We've flirted with that a little bit, but we don't. Honestly, I don't like it when our new highs data is too far off from Dow Jones or some of the standard data providers, right? Because it adds confusion, I think, among the analysts for no reason.
No, I think Strazza said it best. It's the new highs data. It's not perfect. It's not like it's a science where like, okay, we got these number of new highs, so buy X on. Like there's no like it's not like a secret formula. It's more of like an art. Like Strazza says, it's not perfect.
Yeah,
which is why we look at it through so many different lenses.
I look at the top row of this and I see, okay, we're looking at about 400 stocks there, 400 out of the 1,500 in the index, right? Yeah. Represented in the top row. What about the other 1,100, right?
Right, they're just middling around.
Right, but are they middling around towards the top or middling around towards the bottom, right?
So there's other indicators that are better for that, like percentage above certain moving averages. That'll give you more information about that. Also, often we do, what are the percentage of stocks within 20% of like new lows or within 20% of new highs? It's just, the problem is, again, like JC was just explaining, it's not perfect. We could look at this stuff all friggin' day, rack our brains. At the end of the day, you want to look at your breadth indicators, and then you want to go look under the hood at as many charts as you can.
Yeah, that's the real value. Quantifying stuff like this, is great. Don't get me wrong. But actually doing the work is so much more valuable. It's a freaking joke. Like you could read a book about doing push-ups, or you could just do push-ups.
And
right?
I'll also say, like, there's a risk of trying to be too unique with what we're doing here, or too different, right? Like, we can script anything we want into our system and run the funkiest like breadth indicators, and we've done that before. We've done percentage of stocks completing reversal patterns, percentage of stocks above some sort of AVWAP.
Also, like percentage of stocks above their late 21, early 22 highs. Like that's another one. Which, by the way, we haven't run in a while. We should probably run that.
Yeah, we pick a date range and then see if
can we break it down by sector? So let's pick the date range from late 21, early 22. And then let's look at the percentage of stocks that are above those levels and break it down by sector.
So basically what JC's talking about is a script that's going to tell us what percentage of stocks or components are above the prior cycle highs.
Yeah.
Right? Like we want to know which ones look like industrials or tech.
And the thought process there is the more of those stocks in that sector that are above those former cycles peak, the more relative strength there is in that particular sector, number one. Number two, it's probably, I'd much rather be buying a stock that's already above those former highs than buying a stock that's running into those former highs for the first time, right? So that's how I think about it.
Totally. They've already gotten the hard work done, right? Absorbing that overhead supply, reclaiming those prior cycle highs. There's other stocks that are just still running into it. How long does that take to digest and get through? We don't know. I'll do that after the show. I want to make sure that our breadth data and our breadth indicators and our thrust indicators are firing at the same time as everybody else's. If we play with this data too much, right, or customize it too much, then we run the risk of our thrust not thrusting when other ones are, right? I think that would be the worst thing that you could do with breadth analysis. Do something so funky that you kind of miss what everybody else is seeing.
I don't agree with that. I don't really give a shit what other people are seeing. First of all, what other people are seeing, we're seeing it too. So any additional breadth analysis that we do is just complementary to that. So I don't agree with that.
I'm just saying we could. If my breath thrust,
why does it matter? Why does it matter that we're looking at certain data that other people are not?
Okay, in early 2020 and then just December,
right?
Everybody's thrusts were firing. What I'm saying is, if I did something so differentiated or customized with my breath data, where I'm not getting a thrust signal when everybody else is, that's a problem.
Yeah, but it's not an or, it's an and. Like we're looking at those data measures and we're building our own shit.
I think you're missing it. It's fine. We're doing good. We do a great job on breath. I'm not worried. We nail the breath analysis every cycle, time and time again. It's great. It's some of the best information that we get. You get it pretty much once in a cycle, and then you kind of set it and forget it. Is the way that breath works. So it's lovely in that way.
I want to mention one more thing that when we talk about breath analysis, it's hard for me to have a real conversation about that without talking about sector rotation, right? And all throughout last year, we got the sector rotation every single time. Started the year in 23. The back half of 22, everything was working except for mega cap tech. And what happened at the beginning of the year last year? You got the rotation into mega cap tech. And then the original leaders, the industrials, the cyclicals, they started to underperform while those tech stocks were the leaders in the first half. And what happened? You got the rotation into summer into those names. And then what happened going into the fourth quarter, right? Small caps weren't working. There were certain groups not working. You got the rotation in October, ripper into the end of the year, spill over into January. Like you got that rotation. So what would be the next logical rotation? Those areas that haven't been working, things like energy, things like consumer staples. And hey, what do you know? Both of them were making new 3-month highs yesterday when nothing else was. That sector rotation is the lifeblood of a bull market. That's what you see. So this is not the same market we were in the fourth quarter last year. It doesn't have to be. And to Spencer's credit, it's perfectly normal what we're seeing, right?
And which sectors are leading to will also impact just how high or low of a reading you're going to get in some of these breadth indicators, because there are simply more stocks in some sectors than others.
Oh, that's true.
Think about it. If materials and real estate and utilities are your leaders, then you're not going to get much of a breath thrust from new highs because there's just not enough of them.
And not only are there not that many stocks in them, the overall weighting in the indexes are nil. I think real estate's 1%, materials are 2%, something like that. Like it's
you want like a little bit of growth and a little bit of value, like a nice mix in 2020. I think we had it. The tech stuff was working, but the cyclical stuff was working too. Energy was working, financials were working. We just got some historic readings.
Real estate is actually bigger than materials. And you know that real estate in the S&P 500 is 2.3%, materials 2.09%, and then hey, look out now, energy a monstrous 3.7% weighting in the S&P 500, 0.0 in the Nasdaq. Mr. Blue
didn't that used to be the lowest weighting? I think it was energy briefly.
Probably it was also the highest weighting.
Hey,
I'm saying recently.
When you guys were in diapers, it was the highest weighting.
Yeah.
Enough hey, you guys, minor leaguers this week. Did you notice REIT heavy? One of our bottoms up scan is REIT heavy.
You want to
not the only scan that I've seen that has ample REIT representation on it. I feel like the REITs are.
Patrick's been on the REIT stuff for.
Patrick's been on the REIT train for a few months now.
Patrick loves his yield.
Some of them have been working. Let's throw up slide 5 there. So let's talk about what this is. So this is what we like to call the minor leaguers.
Boom, boom.
And I really love this scan for a variety of reasons. We got a video dropping tomorrow, as a matter of fact, guys. On why we like these things. But this one in particular is specifically looking for small cap stocks, right? We call them minor leaguers. We traditionally, like in the Russell 2000, you're looking at 300 million to 2 billion is what classifies a small cap. We went ahead and changed the rules here. So for us, it's 1 billion to 4 billion in market capitalization. Also, we don't discriminate with respects to sectors. Every sector is invited onto this list. Also, every country, right? ADR is included. 1 to 4 billion in market cap. And a couple of things that I love about this. First of all, regardless of whether small caps are ripping higher at the index level, like the Russell 2000, whether it's ripping higher or ripping lower, you're going to find strong names here, right? We could be in a raging bull market, and there's going to be small caps that are falling. We could be in a terrible bear market, and there's going to be small caps that are breaking out. So the correlations from one stock to the next and the correlations from the stocks to the individual indexes are much lower on average than what you're going to see at the large cap level, where they move more with the overall indexes. So just huge opportunity in small caps. And that is what I love about this scan, is that there's always something. What about you, Strazza? What do you like about it?
There he is. Just to reiterate what you said before, we're dropping a video on this and some other scans tomorrow. We'll talk about that tomorrow. We'll talk about it tomorrow. How about that?
Yeah, fine. I'm trying to mark up the Hanes Brands international chart. Don't they say the underwear is like recession proof or something? Because this chart's looked so bad for so long.
Underwear is not consumer discretionary?
What do they have it as? HBI apparel. Yeah, it's consumer discretionary.
It should be discretionary. They sell more than underwear. That's why it's discretionary.
Listen, good undies ain't cheap, man.
No. Oh my God, Costco was so expensive the other day.
I love that you buy your underwear at Costco.
Bloomin' Brands on there also.
Not for long.
Your poor wife watching you walk around your house in tidy whities. That must be something.
It's expensive, man. Hey, let's bring on. Oh, I want to say my fun fact of the day that I saw this morning, courtesy of Bloomberg and Jessica Metton, who I met the other week at JC's party. It's been 265 sessions since the S&P 500 fell 2%.
265 sessions, so a little over a year.
So the rally off of the October lows. I know she's going back further, but the rally off of just the October lows from last year has been an absolutely historic rally in stock market history. And I think we could talk to Sonu about this because Ryan has been all over it.
Yeah.
I mean, you can find indexes that literally have been down 1 week since the October lows.
Yeah, the first week of January.
Yeah, industrials is one of them.
Yeah. All right, let's bring on our.
You're talking about something like NVIDIA. I'm going back to October. Industrials have been down 1 week since the late October lows.
Look at the equally weighted S&P.
Up like 18 out of the last 19 weeks.
Yeah. I mean, it's
It's
like,
just wild.
I know. It had one down week in January. It had 2 down weeks in January, and it's been up 1, 2, 3, 4, 5, 6, 7, 8 weeks in a row.
There is just a killer
And
bull
before
market
that-
type of demand for risk assets right now.
7. So equal weight from mid-November. You had 1, 2, 3, 4, 5. You had 7 weeks up in a row for the equally weighted indexes. Then you had 2 out of 4 were down, and then we've been up 1, 2, 3, 4, 5, 6, 7, 8 in a row since then.
Hey, it's been good. You guys, are you guys into the sweet greens? That was on the minor leaguers list too. You guys eating?
Bring in Sonu. Are you not
Is he-
listening?
I'm bringing in
salads?
Sonu.
Yeah, Strazza, you're not listening?
don't know.
Just put in your earpiece so you can hear us.
Okay.
Sonu Varghese, global macro strategist at Carson Group. First time on the show. Let's bring him on.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Hey, guys.
Onu, what's up, my man?
Not much. Thanks for having me. I'm stoked. This is awesome to be on with you guys.
We were just talking about the work that you guys do. You guys do excellent work. Shout out to you guys. Good friends with Ryan Dietrich for many years.
Yeah.
Big shout out to the team. I wanted to just kind of talk about there, if you don't mind continuing the conversation. Can you talk about sort of the strength that we've seen, in the consecutive weeks and sort of just the relentless bid that we've seen since, October at some point?
I mean, you guys said it, right? It's a bull market. I mean, no, 16 out of 19 weeks, the S&P has been up. I mean, that's not, I think, thinking back to some work Ryan did, that's not happened historically. This is something new. Right. And even if you look under the hood, look at you guys are talking about breadth. I was listening. This is interesting. I had one chart up there. I was looking at there was a narrative shift in a sense because after the last Fed meeting was January 30th. Right. And after that, it seems like, the Fed's going to not cut as much. Rate cut expectations were pushed back, all of that. And up until then, they're like, small caps, mid caps are up because maybe a rate cut expectations are priced in a lot. But over the last 5 weeks, what's happened? We've actually seen mid caps and small caps do better. I mean, you were talking about the equal weight as well, right? I always think the equal weight is very similar to mid caps in a way. It's not exactly the same index, but if you track the S&P 500 equal weight, it looks quite similar to the S&P 400, right? And you look under the hood of mid caps and small caps. Yeah, there it is, right? Look at the underlying sector returns, right? JC, you were talking about sector rotation here, but the S&P is up 4%. This was from January 30th through last Friday. Mid caps are up 5.5, almost 5.5. Small caps up 4.5. But look at mid industrials. Mid industrials are up 8%. Mid tech, mid energy, all of them up 6%. Even mid consumer discretionary up almost 6%, right? Then on the small cap side, I mean, you see strength across the board, except in financials. It seemed like last year, March, right? We were talking about, look at regional banks, and that's going to drag down small caps. Regional banks are still lagging, but you have small cap healthcare up, tech up, comm service, industrials, all of that stuff.
Yeah.
What do you think? What do you think a correction at some point this year looks like for the overall market? Obviously, we talk about here new lows are a feature of a correction, and we just haven't got any expansion of new lows at all in any time horizon. So that's the obvious one for me. How do you know you're in a correction when you actually see stock prices go down? Other than the obvious, Sonu, what stands out to you? Is it something with the bond market, maybe currency markets? Like where's your head in terms of you're seeing sector rotation, right? Staples and energy made new 3-month highs yesterday when almost nothing else was. That certainly wasn't what we were seeing last year. So that is evidence of sector rotation in and of itself right there, right? So just kind of in general, how do you think about this?
4 weeks ago, I would have said by now we're probably in the middle of like a maybe 3-5% pullback, right? Maybe even 5-6%. This is historically, again, going back to some work Ryan's done. I mean, mid-February through end of March has historically been a weak period for markets. And we haven't seen that. Instead, everything's off to the races. I think a lot of it, and even yesterday was a good example, right? You had CPI come out. Everyone is like, oh my God, CPI is hot. And we had a slightly different take on that. But CPI is hot, inflation is going to be sticky. Again, going back to like rate cuts, we can't expect as much rate cuts. Yields were up, but markets rallied. Right? It's not small caps didn't rally yesterday as much, but then they have been rallying over the last week. Last week they they outperformed. So yeah, you would think right now. I think over the next month we could be in for. I think Spencer was just talking about that Bloomberg piece about not having 2% pullback since I think October or so, last 260 odd sessions, even more than that. So I think we're probably ripe for a pullback, but will it be 5%? Possibly. I mean, before May, but again, we have, I think next week we have another Fed meeting. Maybe that's a catalyst. Maybe the Fed says something like we are not going to cut rates up until September, right? I don't think they'll do that, but that could be a catalyst for a pullback.
Yeah, I mean, listen, when you see inflation-protected treasuries outperforming nominal yielding treasuries and making new highs, U.S. 10-year yields remain elevated. Bonds have been falling all year, until recently. Crude oil pushing up against new 3-month highs, rotation into energy stocks. Again, rates remain elevated.
And gold is up too, right? But
market is based on lower rates. We're seeing the opposite.
Yeah, no, exactly. I think what's happening is, again, connecting the economy to this, I think good news is good news. The economy seems to be growing above trend, right? That's good for profits, where profits come from nominal GDP growth. If you look at aggregate income growth, right, that's growing that's a product of what employment growth, weekly earnings, and hours worked. That's going at a 4.7% annualized pace. That's literally exactly where it was before the pandemic. It doesn't suggest we are under any wage-driven inflationary pressure here, but it's also indicative of nominal GDP growth. That's probably between 4.5% and 5%. That's good for profits as well. Inflation is easing, right? Especially once you take out shelter. There's any number of issues with shelter, but you take that out, all of the rest of it, right, including energy and food, that's running at 1.8% over the last 6 months, last 12 months. That means real incomes are growing, right? Real incomes are growing. And then you come to, like, you guys I know talk about dry powder and cash on the sidelines and things like that.
Yes, I want to ask you about this slide. Can we bring up the dry powder slide? There we go. JC's been pounding the table on money market funds and all the billions and trillions, JC? Dollars?
Trillions, bro.
Trillions and trillions. I'm sorry.
If you think $1 billion is cool.
Yeah, no. Right. Trillions. Sorry. So, let's talk about the state of dry powder here from an economic standpoint.
Can you zoom in on that, Spencer?
Yeah.
So, economic dry powder, literally what you said, right? Look at household net worth. That's 736% of disposable income. I use disposable income. Then you can compare apples to apples across time, right? And that's higher than where we were at the peak of previous expansions, whether you look at 99, 2007, 2019, right? Why? Because asset prices have gone up. You guys know stock prices have gone up, home prices have gone up, even deposits. You're talking about cash on the sidelines. That's it, right? Deposits. But liabilities, which is mostly mortgages, but there's some credit card debt and other like student loans, etc., all of that in there. That's still sticking around 100% of disposable income. If you look at liabilities as a percentage of assets, that's at 12%. Before the pandemic, we were at 13%. And this deleveraging, actually, the knock on the chart on the left is like, oh, but that doesn't apply across the board. What about lower income groups? Look, liabilities as a percent of assets have gone down for almost every income group. Deleveraging has happened everywhere, right? So if the savings rate is lower than where it was before the pandemic, that's because households are worth more. They need to save less. And that's basically dry powder. That's fuel for economic growth. That's the way I look at it.
What other corners of the economy are supporting this bull market?
I think the main part of the cake is consumption, which it makes up about 70% of the economy, a little under that. But there's icing on the cake. I think construction, look at construction, right? I mean, you're talking about interest rates, and interest rate increases, it did hit the housing sector, right? It hit it hard, but housing's coming back now. Look at total, the chart on the left, right? Total units under construction, single family and multifamily, that's running 46% above the 2019 average. You look at the right, that's manufacturing construction. That's going through the roof. It looks like a chart of, super microcomputer or something, right? That's manufacturing construction after adjusting for inflation is up 118% since the end of December. And that's driven by spending on semiconductor chip plants, EV battery plants, all of that stuff. That stuff is up 1,027% since the end of December 2020, right? Construction jobs, you looked at that, payroll just came out last Friday. Construction jobs have increased 60,000 over the last 3 months, 110,000 over the last 6 months. Just for context, how big is that? In 2019, the full year, construction jobs increased 130,000, 131,000 or so, right? I think this is all icing on that economic cake, to be honest.
Sonu, you and Ryan do a podcast, right, called Facts versus Feelings. Why do you think the facts, or sorry, the feelings, or the vibes, so to speak, why do you think the vibes can differ so much from the facts?
I think let's just take an example. Yesterday's inflation report. I mean, everyone sees something else in the report, right? In any economic data, for that matter, even probably market data, right? You guys, I look at if you take returns, right? You take the S&P's 500's returns. It's a function of it's a combination of earnings growth plus valuation multiple growth, right? You could say future expected or trailing, whatever. But earnings growth is what it is, right? It's what companies report or what future expectations. There is sentiment in that, but the valuation piece of it is mostly all sentiment, right? Like one person doesn't agree with the next person. How much do you pay for future earnings, right? That's all sentiment in a way. So that's how I think about it. A lot of the work Ryan does, essentially looks at, that's the thing. I can do all the economic charts and all of that, but you want your ear to the ground, right? I like to think that's what Ryan looks at day in, day out. But you want to see what a market price is saying. Right. At the end of the day, that's where your corroboration comes in.
Yeah, I mean the same can be said for the stock market as well, right? The feelings about it can differ wildly from what's actually happening, right?
Sonu,
and I think that's something
exactly.
that we talk about a lot.
Sonu, you talked about the dry powder and stuff like that from American households and things like that. But just generally speaking, just kind of like household net worth and just like overall, families are wealthier, just generally speaking, than they were before. Can you touch on that at all? I'm really curious about that because it's not any work that I do personally, but I'm generally interested.
Yeah, I think if you ask families, and that's the thing, we're going back to sentiment, right? If you ask families, okay, how are you doing financially? I think most people would say, yeah, pretty good, right? For the most part, we are, financially better off. Of course, their 401ks are worth more. Right, inflation's coming down, and they probably still have complaints about inflation, and probably rightly so, because food prices are much higher than they were in 2019. Right, that's a fact of the matter. Car prices are higher, mortgage rates, all of that stuff is higher. But if you own a home, for example, and 66% own a home, right, of households own a home, they've seen those prices go up. There itself is like wealth has gone up, and then stock prices, and then deposits too.
Yeah, and people will say, well, things are good for people who own stocks and real estate, but if you don't own stocks and real estate, things are not good. Well, that's what you see in bull markets, right? Yeah. In bull markets, people who are invested in real estate and the stock market are doing very well. Those who are not thrilled about it. Like, so the fact that, if you don't own your home or you don't own real estate and you're not in the stock market, you're not benefiting from this. Like, that's what you see in bull markets. That's all right, right?
Exactly. And even if it's not like, even after mortgage rates went up to 6.5%, 7%, 8%, there was no home buying, right? There are people who bought homes at those mortgages. And you think going back to like dry powder, right? Say rates come down, or mortgage rates come down to 6% or 5.5% or something, say a year or 2 years from now, they can refinance. That's a lot more money coming into consumer wallets right there, right? It's not like home buying went to zero. So I think that there's more dry powder. And meanwhile, home prices continue to go up, right? Will it go up at the pace we saw, over the last year? Maybe not, but it's not crashing.
What about Europe, right? When you talk about the United States, when people were talking about, oh, it's only 7 stocks and everything like that, I'm thinking to myself, do those 7 stocks trade on the German DAX? I don't think so, or the Japanese Nikkei for that matter. But sticking with Europe in particular, a lot more industrial exposure than in the United States, like a lot more. Next to no tech exposure. A few countries, the Netherlands, right, sprinkled around some technology. But what's driving the strength in Europe and the outperformance over the United States for that matter?
I think the DAX is a good example, right? DAX is a lot of industrial companies. DAX is new highs. I don't know where lately, but it's close. A lot of it is, especially Europe, the companies that are not geared towards internal demand, right? Where you talk about US stocks and US companies is geared towards, like, you're talking about Costco. It depends on what's happening here for the most part. With Europe and even Japan for the matter, a lot of it depends, a lot of those companies are exporters, and their revenue comes from outside Europe for a large part. And outside Europe, mainly the United States, that's doing well. China seems to be recovering. I think that's been a story over the last couple of weeks. China's coming back. You guys talked about copper.
We're long China. We're in.
Yeah. So I think there's a story there, like China's coming back. We're still underweight China. I mean, but that's a much longer term direction for our strategic portfolios. But yeah, near term, China's, it's always a question of like how much further can that economy fall in terms or slow down, and probably not much more, right? So I think there's a little bit of a bounce here.
Funny you said that, because our initial trade on China, like the whole philosophy behind why we were getting long China was, how do we make a bet that China doesn't go to zero? What's the bet that China doesn't disappear and maybe stock price? That was the thought process, and we ended up getting leaps out in January, and we're sort of we're trying to sell puts to help pay for those, but China stocks don't go down, so those puts are worthless, so we haven't sold any puts. But that's sort of how we thought about it.
No, I think there's a commodity story there as China comes back. I mean, prices have been falling. We just saw consumer prices go up a little bit. I think that was because of consumer demand, Lunar New Year, all of that. There's timing issues. But PPI is still down. I think that's works both ways, right? PPI in China being down is not bad for import prices, inflation in the US. That's a good thing. But yeah, no, I think there's especially over the short term, I think the story of China coming back, this year, their target for GDP growth is about 5%. I think that's probably on track, and that's not much slower than what they did last year.
Yeah, but are they just making shit up?
Yeah. I know. That's the thing with, it's funny because everywhere else GDP growth is GDP, the numbers, right? Even if you take it at face value across the board, whether it's the US, Germany, it's an output, right? People do stuff.
I trust the Germans. I trust the Japanese. It's the Chinese and American government that I don't trust so much, to be honest.
But China, actually GDP growth is an input. They literally tell us, right? They've told us, okay, here's 5%. We need to get to GDP growth of 5%. So it's an input in the process. GDP growth is not an output for China. It's an input, and then they back into it. They tell local governments, state governments, all of that, okay, you guys have to spend X number of dollars to hit that, or yuan to hit that. Right, so it's a very different, how you should view China. Right. Growth in China is different.
What about
one way of doing it?
Sonu, what about I know you guys focus more on equities, but you guys work for a big asset manager. How much in assets do you guys have at Carson?
34 billion. Right now.
Is that all? So $34 billion in assets, and equity. Focus, right? I've known your work and Ryan's for so long. What about, the new Bitcoin ETF? You don't have to go into the blockchain chain to position, assets there. Like, how are you guys thinking about this new vehicle, which it's not little, as we've noticed, plenty of inflows. There's plenty of liquidity. How do you think about that?
No, we actually like the fact that there's more, let's say there's easier access to it. And we've given access to our advisors. We have about 350 plus advisors across the country. And our whole goal with the platform is we want to give choice, right? We're one of the few, I think, big platforms out there that have actually onboarded several of the Bitcoin ETFs onto the platform. So, our advisors can go out and buy it. And we're seeing some flows into that. And it's early days yet, right? And so I think it's nice to have more choice, right? All else equal, you want more choice than less. And the Bitcoin ETFs do that.
I know you more recently. I've known Ryan for many, many years. And, there's a lot of good sentiment information. Do you guys track the flows of your own advisors and what they're doing?
Oh, absolutely. All the time, right? Yeah. And like, for the most part, like out of it's $34 billion. I think the median portfolio, I'd say the median portfolio is sort of like a 60-40 type portfolio. One thing we've seen as we're talking about cash on the sidelines, a lot of our advisors, I mean, they're in equities, our own models. We run strategic models between Ryan, myself, a couple other gentlemen, Barry Gilbert, Grant Engelbart. We have strategic portfolios, tactical portfolios, which are more shorter term and unconstrained, right? So we have, there's a portfolio we've been running for about a decade now. That's benchmarked to a 60-40 portfolio, but right now we are overweight equities. That looks like an 90-10 portfolio. We are bullish on equities. It's mostly equities right now, but that can go to like 0% equities too, right? So right now, I think everyone's overweight equities, but they're all underweight duration. Going back to your point, like exactly in terms of flows, and we haven't seen that flow back into duration just yet. Now, in our portfolios, we were really low duration last year. We were like at 2 years or something. The benchmark's at 5.5, 6 years, right? We were really underweight duration. In October and November, it worked out. We increased duration to about 4.5 years. So we're still underweight, but our big position is really equities. And even for our advisors, we're not seeing that appetite for duration. They're like, look, we can get 5.5% with cash. Why should we take more risk?
Where you living these days, Sonu?
Chicago. I'm in Chicago, not far from Wrigley Field, if you're familiar with it.
We're coming in September, so we'll definitely hang out. Yeah. Sonu, sure. Spencer, make sure that he gets an invite to Chicago, so come by and hang out.
Got it. Wait, Sonu.
And then hold on, Sonu, were you born in Chicago or no?
No, I was born in India, but I grew up in the Middle East, actually, the country of Oman. So I've been, and then came to the Midwest, came to Purdue for grad school, was there for 6 years. And I came to do engineering, and I joke, it took me a full bachelor's, master's, PhD in engineering to figure out I didn't want to do engineering anymore. And then I started modeling derivatives and options and things like that. That's how I got into
Where in India are you from?
South India, Kerala.
I love India so much, man. It makes me so happy.
You come out here and go get some good food, and looking forward to meeting you guys up here. If not, if not in New York City before that.
Yeah.
Wait, before we let you go, Sonu, how big a risk is there for a rate hike this year? How far offsides is the market for that?
My personal opinion, I don't think that there is. I think the next move is a cut. I'll put it this way. I think the next move is cut. Right. And if you think what needs to happen for a rate hike?
When?
Oh, June?
That's soon.
Yeah. Well, that's the consensus. That's the consensus. Yeah.
What are Fed Fund futures pricing in for % in June?
Maybe 50-60%, something like that. Which is a coin toss, right? So 60% is a coin toss, even in like a sure thing. But again, markets were pricing in 150 basis points of cuts in 2024. That was kind of like a sure thing. That was 90%, right? But market narratives can change within 1 month. Now we are back to 3-4 rate cuts. So narratives can shift pretty quickly, and you get, say, 1-2 more inflation reports that are on the soft side. I think suddenly June's back on the table. Maybe May is back on the table. I think May is being underpriced right now, to be honest. May is kind of like 15% probability. I haven't looked this morning, but I think May is like 15%. I wouldn't put it, I would say May is more like 30-40%.
We're getting questions. Is Sonu vegetarian? Are you veg or non-veg?
Oh, I'm non-veg. I should be veg, I think.
Yeah. Team non-veg. Team non-veg over here, Sonu.
I should have, but it's like, it's Chicago. I can't not eat anything, and I just don't put ketchup on my hot dogs. Been in Chicago too long.
I worked at a hot dog joint when I was in high school, and I put a little ketchup.
That's like my kids. I'm waiting for the day when I can tell kids no more ketchup on the hot dog, but maybe a decade more.
Sonu Varghese, global macro strategist at Carson Group. Sonu, it's been a pleasure to talk to you, and looking forward to doing this again in person one day. And thanks for the chart, thanks for the insight, and thanks for hanging out.
Thanks, Sonu. Appreciate it.
Great to be here. By the
way, he already said yes to the invite, so he's coming to Chicago.
Nice.
I'm here.
He's already there.
He's already there.
He's already there. We're working on the hotel now.
All right. Thank you.
See you, Sonu.
Keep you posted, Sonu. So for those wondering, yes, we are having an event in Chicago in September.
But we're doing another event before Chicago.
That's right.
We should probably talk about that a little bit.
So this is in Sonoma in May 21st through 23rd. And that same group in our portfolio accelerator will be invited to Chicago, right? So this is an intimate gathering of market minds, locals from the Bay Area coming up. We got some killer traders coming in to hang out with us, and we're gonna do the same thing in Chicago. We were just doing that in New York a couple of months ago, and it was freaking awesome. So for those of you who are interested in such things, Spencer, drop the link in there, and Mary is accepting applications now to see if
link is dropped. Link is dropped in the chat. Yeah, and who there will also be some people that have been on our show that will be there as well.
That's right. That's right. And New York's going to be tough to beat. I think all of us were thrilled with how that went. It exceeded all of our expectations, I'm pretty sure. It's going to be tough to beat that in Sonoma, but I did live in Sonoma for 5 years, and I know a few places. I may or may not have the taco guy on speed dial.
Okay. Sonoma's going to be a better time than New York. We might not have a nice big dinner with all of our friends like we did in New York, but I think it's going to be better in a different way. I'm excited. Also, if we're doing announcements, JC and I are going to be in Miami a month from today.
Yep.
So meet me in Miami.
Email us. I'm gonna put it in the. I'm gonna send the email out tomorrow. I'm gonna include that. We'll be at the Hyatt in Brickell, Strazza and I, getting some Cuban food.
Yep.
Maybe take the boat out.
It's right on the river. It's right on the Miami River.
It is. I think I had like my 8th grade prom there or something like that. Like,
oh yeah,
dude, that place has been there forever.
Didn't we have a happy hour there?
It when you walk in, it looks like it's been there forever.
That restaurant we went to for that happy hour, I think it was 2022. Wasn't that right on Miami River where we're going to be, or no?
It was not too far from there. That's a good call. Good
I know my Miami.
You are. You're so Miami. You're more Miami these days than I am. I'll tell you that much.
I'm getting good. All right. So that's it,
Steve.
The announcements.
Yeah. You want to talk about China or Asia? Sorry. You want to talk about Asia?
Please.
I would love to talk about China, Spencer.
I'd love to hear you talk about China. Do we have a China bumper? Just like a big red commie?
No, but we have a Strazza bumper.
Strazza bumper.
First of all, it's a great bumper. It's a great bumper. Second of all, it's definitely too long. Third of all, I love the shots of Strazza when he was younger and thinner. Those are good. Those are good. I like that.
The man on the street, that was like 40 pounds ago, at least.
Yeah.
That's good.
Too many croquetas for you there, Spencer? Or Strazza?
There's been a lot. There's been a lot of croquetas, a lot of croissants. The bakery across the street, it's killing me. It's too good. It's too good. You say I don't like French stuff. I'm frequenting my French bakery like 4 times a week.
You're the one who's always hating on French food. You're like, I hate French food. I'm like, dude, who hates French food?
No, they do certain things really well.
Pretty sure that they invented like fine dining.
Yeah, maybe. So
the French do a lot of things badly. Food ain't one of them.
So China.
Yes.
You like it?
We're long. Yeah, I'm in.
Should we be longer?
Yes.
Look, this is like we're YOLO long. Is that fair to say? Right? We're like
I am 1/3 of the way in, and I haven't sold any puts because you're not getting paid to. So I am not as long as I'd like to be, and I haven't sold any puts. So, I'm just kind of like in purgatory, kind of.
I'm the same way. I put a starter position on the Baba yesterday. And it's probably the wrong vehicle, but we'll talk about it. First, throw up the Shanghai. Shanghai Composite. I moved all the charts next to each other, Fonz, so we're going to start at 15. Shanghai Composite. So this isn't local. I'm running the 4-week rate of change.
Local, Strazza. Local what?
This is in yuan.
This is priced in local currency.
That's right.
Let's remember, Strazza thinks everybody talks like he does.
I'm sorry.
This is priced in local currency.
Allergies on the fritz out here today. So China, we're looking at the 4-week rate of change. This is akin to the 20-day, right? So it's short-term momentum is what we're looking at. Spiking. about 11%. We haven't seen a reading in excess of 10% over a trailing or rolling 4-week basis since June of 2020, which was Thrust City coming off the pandemic lows.
Thrust City.
So I've kind of highlighted on the chart. Big momentum coming off of a pretty key level. And when you look through all of the assets or indexes, right, the major ones out in China, this is a theme. So I know we have JD next. Let's skip JD and come back to it. Invesco, the CQQQQQQQ. Boom, logical level. China large cap, FXI, financial crisis lows. I could draw a horizontal line here in EWH. I could do the same thing in local for the Hang Seng index. This is Hong Kong, right? Logical level. What if this is not a Mondo top, right? Now throw it back to JD.com because I think this is an interesting one. I'm asking myself, okay, what's the vehicle? You're talking about how premium is kind of shot right now, so you don't really want to sell puts. I think you go long calls. Is what I did with Baba. JD to me seems like a really nice vehicle. Throw up the one with the markup for the NASDAQ 100 exclusion. JC, how long was JD.com in the NASDAQ 100? Which, by the way, Alibaba never was.
I don't know the answer to that.
They put this thing in 2015. This thing had an 8.5-year run in the NASDAQ 100. So one of the top 100 growth stocks listed here in the United States. They got kicked out last December, pretty much at the lows. Do we look back on this chart and say, hey, the time to buy JD was as soon as they got booted from the NASDAQ?
I got a couple of charts for you.
Do we come off this $20 level just like we have time and time again over the years?
Look at the new slide 2, Spencer.
And there's also other stuff going on in EM and Southeast Asia more broadly that I think.
You like that, Strazza? Is that interesting to you?
Yeah, that's fine.
Look at the next one, by the way. When you talk about Baba, that you're not sure if it's a great vehicle. If you're trying to buy China through Baba, I think you're probably fine. Isn't that what this chart shows?
Yeah, I want
the weighting. What's the weighting there?
I want 78 in the Baba. We could throw that one up too. This is how I have it marked up and how I'm going to trade it.
Baba is 9% of the FXI. That doesn't sound like a lot.
This one's gotten a lot smaller over the years.
Has it?
Yeah, throw up 23. Are you kidding me? The market cap losses in some of these big China tech names.
China has come down with it, but China come down with it. So is the weightings dramatically different?
I think Baba used to be a lot more than 9%.
Really? That's something to go back and look. I'm curious.
So 78. I think that's short, intermediate term trend reversal. Right, still a lot of work to do over longer time frames for the primary trend. But I think this is super tradable. Buy a little out of the money calls. Maybe this momentum carries into back half of March and April. I think this is very tradable. And I also just think it's like an environment thing and intermarket thing where breadth is expanding outside of the US, right, for global equities. Participation is broadening in Asia itself, right? Japan has already been there as big leader. Now do the other countries kind of join the party? I think so. And we're slowly seeing it, right? We've talked about the Philippines on here. Korea, not bad.
Also,
Taiwan,
Strazza, the relative strength. I mean, China making, hitting the highest levels of the year relative to S&Ps is very impressive, right? Yeah. That theme of, short the S&P 500, long other things against it, whether it be developed markets, whether it be China, whether it be energy, gold. There's a lot of things working against an S&P 500 short that continues to come up again and again and again and again. China being exhibit A.
Yeah. I mean, and you can chart it on a relative basis too. I mean, the relative trends are just so extended. So extended. It's crazy. Oh, one that I like too, I'll drop it in. China versus India. I think that's a ratio we should be paying attention to because this is the way that money managers are thinking. One versus the other. You're seeing, allocations totally kind of just cut in half. It's totally just collapsing for Chinese EM and India kind of blowing up, right? So they're treating these as alternatives.
That's interesting. Would you look at would you look at an FXI Indy? So like FXI China ETF, Indy, INDY India ETF, or would you look at Shanghai Composite relative to a Nifty 50?
I think you'd want to do both, but for me, I'm a U.S. dollar denominated investor, so I would be doing the FXI Indy, and we're scooping back above the November 2022 lows right now.
Yep. Yeah, it's I think it was late October. I think it may have been Halloween 2022. That's when my twins were born. How about that? So the China India ratio bottomed out the day that the boys were born. No? Fun fact? Nobody cares?
No, we care.
No, we like it.
What are the chances?
Yeah, that's great.
Thank God I had boys, man. If I would have had 2 girls, dude, I would have 3 girls. Like, that's very aggressive. So those boys saved my life, man. Saved my life.
So how was the girls' Disney trip?
It was good. I'll tell you what, while the girls were in Disney, it was just me and the boys. Man, were they chill. It's amazing watching human nature, like just how males behave when the females aren't around and how different they are. They're only 1 year old, and you could already see the difference. I mean, it is fascinating watching human nature. It's really cool.
Like the boy energy in your house is just running wild while
they were just chilling, man. We ordered Japanese food, put on a little Mickey Mouse. We were chilling on the couch, drinking some milk. It was chilling, man.
Yep. Victoria's
Sushi
Secret
and milk. What's not to like?
Victoria's Secret.
All right. Hey now. Let's do hot corner. I saw a few charts in there.
Yeah, we got stuff to say.
Please.
Yeah.
Hot corner. So hot right now.
So hot right now.
All right, Archer Aviation just keeps happening. Another 7.5 million.
Yeah, a lot of repeat customers here.
Stellantis and Archer. And you can see the demand coming into the stock. It's just
about 15 million at the beginning of the week. Now another 7.5 million.
Yeah, I mean, this thing's been ripping higher, right? Like we have our horizontal line drawn at what, the 2022 highs. You could just zoom in on this one, show it off the 2022 lows, right? It's just one of those classic not tops, right? This is just a classic failed top. Momentum coming off with a little shakeout, fresh multi-month low just earlier this month. And the last week's been a straight line higher, up $1. So this one stands out. I guess we don't have the chart. We had the chart in the deck somewhere, Fonz.
Dude, I'll tell you what, when I looked at this, it's almost like, is this the same hot corner from like a few days ago? Because there's repeat performance. Uncle Warren coming in there buying the Liberty Media. You got the DeFranco guy buying the Sats. I only know that because his name is James DeFranco, and it reminds me of the actor, not James Franco. Yeah. Right? So like these names keep popping up. The Stellantis buying the ACHR, which it bought, I think, late last week, and then another party was buying it also over the last couple of days. Like there's something funky going on there. Yeah, really interesting. The hot corner has been hot lately.
It has. And we got another good one today. This Greenhaven Road Investment Management up their stake by more than a percentage point. It's almost 6%. Par Technology Corp. If you zoom out on this one, this is still a small cap. If you zoom out on this one, this is one of those mega.com bubble bases, right, that has completed. And now this is like a fractal off of that base. Like it's got some sort of like base on base going, JC.
Yep, I see it.
Yeah, but this is great, right? Textbook, you got the long-term moving average curling higher beneath price, indicating that the primary trend is now higher. I think you have a really clear level here called 47. Trade it back to 90. That's, hey, double.
Strazza doesn't know anything about pars, though. He's more of a double bogey kind of guy, right? Right there,
Strazza?
Yeah. Hey, now.
Whoa.
Oh, low blow. Too soon? Too soon?
Wow. Coming hot.
Coming in
All
hot.
right. Hey, speaking of doubles, double birdie.
You didn't double birdie anything.
I had 2 birdies. One of them my buddy had to give me because I missed the putt. It was a gimme putt.
Is it?
Yeah, it was. I was so upset. What?
Is this one of those easy courses you play on?
No, dude. No.
You've gotten better. You've gotten better.
There are flashes of greatness in my golf game.
I haven't seen
no consistency.
I'm rooting for you. I'm rooting for you. So
85. We're getting it done this year.
all right, in the front nine.
Fuck you. As soon as I get it done, I'm taking a trip. We're gonna play.
All right, done. Then you'll shoot 120 in my course.
Yeah. You know what? Sam Gatlin, our all-star intern. Par is a freshly squeezed name. Sam is just killing it with our freshly squeezed scan. We're running it every 2 weeks now. We're going to talk more about it on the webinar today, which will be out tomorrow. But this is our short squeeze scan, right? And Par is on there, 15% short interest, 17 days to cover. Do you know what that means? The DTC ratio simply means if all of the volume on a given day was the short sellers covering, how many days, based on the average volume, we'll use like a 20-day or 50-day average, I think we're using 20 in this case, how many days would it take for all of them to cover? More than 3 weeks, 17 days.
Time.
That is a massive days to cover ratio. We are finding the more that we kind of dig into this universe, that the days to cover is just as important, if not more important, in terms of giving you a real nice squeeze.
Of course it's more important. First of all,
well, because the
of course
short
it's more
interest
important. What do you mean? Why is that such a surprise?
What are you talking about? Most people just look at the short interest.
Well, most people are dumb. The point is
a high short interest implies a high days to cover, but it doesn't guarantee you one.
Right. So if you just sort by days to cover instead of short interest, you skip all the nonsense and you go to the ones with the highest short squeeze potential. But that shouldn't be surprising, Strazza. Not for you.
We do this a little bit differently. Most people would be sorting this table by short interest and then making sure that the days to cover ratio.
No, that's a dumb way to do it. That's a dumb way to do it.
Whatever, dude.
No, it's a dumb way to do it. With the way we do it.
Then you should have said this 3 years ago when we were doing it that way.
I did. We've always looked at the short ratio. Always. Are you kidding me?
The short ratio is the short interest. The days to cover ratio.
The short ratio is the days to cover.
Oh my God! This right here is the problem. There's 4 different definitions. No one can agree on what shit means.
The definition. Stop. The definition of the short ratio is literally the amount of days to cover using the formula that Strazza just displayed. The short interest is just a percentage of the shares that are short. The short ratio is days to cover. It's the same thing.
Okay. All right.
Fine. Listen, either way, these.
Why are you guys giving me pushback on this?
I'm not pushing back on shit. We're good. We're good.
Hey.
Soundhound. We're
arguing about saying the same things.
MicroStrategy has been on this list forever, also, which is just awesome.
What's the short ratio on MicroStrategies, dude?
It's right here, number 3, 19% still. But see, this is what you typically see. 19%, so hefty short interest, but then like 2 days to cover. I can't get that excited.
Because it trades the volume is off the charts in something like MicroStrategy.
Trading 10, 20, 50 million shares a day, then you're not going to get a big days to cover ratio. It's the ones that are like giving you high, teens short interest percent. So like look on down the list at something like EHang Holdings, 16% short interest. And then you get a double-digit days to cover. That's really nice. Those are kind of the ones we're looking for. Zentalis sticks out too. 23% short interest, 16 days to cover. That's good stuff. So this list always full of some gems. And Par Technologies is double dipping here today, right? It's on our freshly squeezed list. It's on our hot corner list. We love it when they're popping up in multiple universes. So.
Nevertheless, you guys will get this video tomorrow. Speaking of videos, Spencer, well, before we let Mary in, do you have the New York video available to show the people?
I have the New York hype reel.
Throw it up.
You play it?
That'd be cool. Yeah, play it.
All right.
Reminisce a little.
All right.
So this was New York City. All right. So we got a lot of people with opinions in this room, right? Maybe some too many opinions.
Yeah, we're at our first portfolio accelerator in New York City. It's been lovely.
It's a little laggy. It's a little laggy.
A little laggy. Just drop the link and people can watch it on the site.
Yeah,
but
it's a little laggy.
So this was our portfolio accelerator in New York a couple of months ago, which was so fun.
If you learned anything being here, it's that JC has a
I'll
network.
turn it down. You can talk over it.
We need a network too.
Talk over it. Yeah,
Just drop the link. All right. It's too laggy. Drop the link.
All right.
Clearly, this technology is not good enough to play a video.
JC gave a great speech, and we had so much fun doing like a live survey. where we were calling out like levels. Does a 10-year see 5% or 3% first? And people were all raising their hands.
How was my speech? Was it good?
Yeah, it was nice. It was nice.
I just wanted to thank everybody because it was a special moment for me. New York City is a special place for me. You know, you had people flying in from all over the world. Lou Dog flew in, the Fonz, Sean was, I mean, the whole crew was there. And, you know, we had a lot of other friends of ours all around New York City and the surrounding area. Some people flew in for it. A lot of people drove in. So, you know, I mean, we've come full circle. You know, I got into this business a little over 20 years ago, and now here we are, you know, celebrating the bull market. You know, I mean, just that was a bull market dinner. I mean, I've been to a few bull market dinners, quite a few in recent months, I might add. But that was a lot of fun, man. That was a lot of fun.
It was great. I can't wait.
It was a blast.
I have to first of all, no, it is still a birdie if it's a gimme putt. It's like a 3-foot putt, and your buddy says pick it up, and you putt it anyway. It's still a birdie.
No, it's not.
It's a birdie.
Bring in Mary. Bring in Mary. It's not a birdie.
It is. That's
Before
the
I
rules.
bring in Mary, couple quick stocks on my radar. Dollar Tree took a big write down on in the earnings report. So
have you guys seen the new stuff about the shrinkage, Spencer? Have you seen this on the news? There's these like shrinkage rates.
it's off the charts. Yeah, these stores they have one employee for the whole goddamn store. So it's like, what are you supposed to do?
Something like this one. They're living in this freaking giant house in the suburbs. They've stolen like $20 million of stuff from Ulta.
I haven't seen that. So yeah,
Big
but
business.
business models, yeah. Also, we got we don't usually talk downgrades on this show unless they're interesting. We have an interesting one here. Wells Fargo downgraded Tesla today to underweight. You very, very rarely get a big firm like Wells Fargo downgrading a mega cap tech stock to sell. In Tesla's case, I had to go back to 2020 to find the last time a non-boutique firm downgraded Tesla to sell. It just doesn't happen very often. So there you go. There are a couple. I don't know. But you know, there are firms that are at sell. There are firms that are at neutral. You just don't see a downgrade to sell very often. So I thought that was interesting. And it's from Wells Fargo. They're large firm.
5 years ago, Elon Musk came out and just verbally berated one of the big banks. I forget who. I think it was Goldman. Did you guys not remember this?
It was probably
about the sell rating on the stock.
It was probably JP Morgan because they've had to sell on Tesla for years.
He made a big, you know how he just goes off sometimes, big fuss about it.
Yeah. JP Morgan's had to sell rating on Tesla for like 5 years. So you know, take that.
Yeah, when he feels strongly about something, Elon Musk got to give it to him. This man speaks his mind. He doesn't give a shit.
All right, we're bringing on Mary.
Mary.
Hey, now Mary in the house.
Hey, good morning, guys.
Look at that shirt.
Yeah, I had to represent today.
I love the representation. I like the black under, so it looks like a long sleeve shirt.
I mean, it's Michigan. It's still cold.
Michigan in the winter. Touche.
Have to layer. Yeah.
Mary, before we get into the situation, what do you think? Do you think that Sonoma is going to be better than New York City was in January?
You know, they're going to be wonderful in their own unique way. I mean, New York was epic. We had epic guests, and I mean, you can't beat the city, right? But then totally contrast that with Sonoma and wine country and the vineyards and the beauty that is Napa Valley. I am making a run every morning to Bouchon for those croissants because I dream about those. Like,
well, we're going to be in Sonoma, so you got a mountain in between. I don't know if
it's
you realize
right.
this.
I'll go around the mountain.
Mountain in between Bouchon and yeah, you know, this is beautiful wine country, vineyards. Looks nothing like Hell's Kitchen. That sounds nothing.
There are no rats.
Sounds nothing like Hell's Kitchen.
Yeah.
Smells nothing like Hell's Kitchen also. No. So, you know, upgrade there for sure.
Definitely. Yeah, it's going to be
beautiful.
Did someone
say croissants?
Yes, croissants. Okay. Have you had a Bouchon croissant?
No. I'll come with you.
Oh, they're amazing. Okay.
We're going to Sonoma. We're eating chilaquiles.
We can have the tacos too from the taco truck.
They got Mexicans where we're going.
Listen, if I know anything about our trips, we're going to eat a lot of things. We're going to eat.
They revolve around food.
I know, but the Mexicans dominate the space, so we're gonna lean into that. We're gonna lean into that. There's plenty of farm to table stuff in wine country, but we're gonna lean into the Mexican cuisine while we're there. When in Rome,
just like we lean into the Jews and the Italians in New York City.
That's right. That's right.
There you go.
All right, Mary. So for those who don't know, Mary, our head of sales and customer service, our concierge extraordinaire at All Star Charts, and nobody on the planet consumes more All Star Charts research than Mary does. So when Mary comes on here, her perspective is very unique compared to the rest of us who take a lot of these things for granted. Some of the things that interest us might not interest Mary. Some of the things that interest Mary might not interest us that much. So it's very, very interesting. So with that being said, Mary, what is on your mind? I'm very curious.
Yeah, well, so it feels like Steve and I are on the same wavelength because I brought along a Baba chart.
Hold on, Mary, let me say something. This for me is like confirmation, right? Like when I'm looking at a chart, I look for things for like confirmation, like an overbought momentum reading, new highs in the relative trend, or Mary getting long, right? all good for confirmation. So when I heard Mary likes the Baba, I was like, oh, sweet.
Sweet. Well, I mean, it's the China trade in general. Obviously, know what you're trading. I approach China with a lot more caution than years past, just because it's burned me a few times. But the RSI, I like this one. It's showing bullish momentum and higher lows. For me, I know Steve, you've got the 78 level. Is it?
Mm-hmm.
You guys know I like a VWAP. So if you anchor a VWAP from that July
80,
high,
right?
it's right up there at 80. So I'm looking at that 78, 80. I'm not in yet personally. Now that you guys are saying I'm long, and I feel like I've missed the boat. But for me, it was that 78, 80 showing some strength above that. That's where I was going to get in.
Yeah. This is, I'm half long and I'll be full long on a break of 78.
Yeah, there you go. So I don't feel like I have to beat that horse because you've already talked about it. I also brought along the Valero chart. I've seen people, talking about Valero here in the chat.
Mm-hmm.
I mentioned this one last week that I was watching this 147 area, started a position. And I mean, it's I was looking at it last night thinking, oh, there's still an opportunity here. But I mean, it's up 4.5% today. So it's starting to move. But, this.
Oh, wow. Look at this move
Yeah,
today. I mean,
right?
this is a breakaway gap.
Yeah.
Energy stocks across the board absolutely ripping. They were showing signs yesterday, already making new 3-month highs. Look at them today on a relative basis, outperforming the S&P. Energy, another great example of being short the S&P, long something else against it. We talked about China. We talked about Europe. Energy front and center.
Yep, absolutely. And Alfonso, I think, ran a scan last week about the energy leaders. And a lot of oil and gas names popping up, a lot of names that we already have trades on, like Marathon and Phillips 66. Those have kind of already left the station. And so as I was kind of looking through some of those names and looking through our research, this Valero, came front and center last week. And it was such a nice chart. You've got a very clear level there. And, we're pushing through it now. So, it's trains leaving the station, but you still have kind of a chance to get in.
And this is the right place to be looking, right? Like, while we can anticipate that the more offensive groups like the E&Ps and the oil field services will become leaders in an environment where we do get a new leg higher in energy, right now the leaders are refiners. So I don't know if we have a crack chart, but the market vectors oil refiners ETF breaking out of a multi-year
same there
base. And Valero couldn't be cleaner. Just super actionable right here. Beautiful chart setup. So I like it a lot.
It looks like, by the way, it looks like you're getting rotation into some of these others. The refiners, while they had been showing so much relative strength compared to these, there's a catch-up situation from the services and the explorers.
They're different trades, and I think both of them work. Like, you could buy the lower bounds in some of these E&P names, or go look at something like Diamondback, like Fang. Go buy a leader in E&P that looks more like Valero, right? So I think totally a lot of opportunities, a lot of different ways that you can do this and gain exposure to energy right now. Valero's up there as one of the best options, though, I think.
So those are the chops that I brought along today. I'm still watching gold and kind of the breakout there that's happening. Miners, I guess I'd love your opinion on why it seems like the gold miners aren't participating in that move. It seems that's just kind of what my take is. It doesn't seem like they're moving quite a lot, with the price of gold.
Mary, you're zooming out too much.
I thought that's what we do.
I never thought I'd say that. I swear to God, I never thought I'd say you're zooming out too much. But in this particular case, you are. Look short term.
Okay.
You're seeing that participation recently
True.
as you got the breakout to new highs. So
True.
now let's see if that continues. I never thought I would say you're zooming out too much.
Right. I know. I'm the one that's kind of way more
know,
short
I
term.
know.
Like, give me the juice and in and
I know,
out.
but look short term.
Easy peasy.
There's some action.
All right.
So what's the trade there? Is it Alamo's gold above 14?
I do like Alamos. Yep.
I like it against 11.
It's
Yeah,
got to be
that-
AGI on a breakout through this like 14 level. Yeah, Billy Cunningham. Sweet. Listen,
That's
if
what
the
I've got.
leaders can't break out, though, don't expect gold miners to start working. If AGI can't break out, this has been the best looking one for years. If this thing can't get it done, don't expect the rest of the space to work.
Can we do a little recess? Because Mary's got a picture that I'm very interested in.
Harmony looks good too, Wavy.
Yeah, it does.
Yeah, your MLPs are doing great. We see you.
All right, I'll tell you about the picture that I put in the slideshow. It's okay. So this last weekend, my husband and I started taking down these 50 to 60 foot large red pine trees that are in our backyard. They're kind of aging. They're kind of threatening to fall on the house in a bad storm, which we get coming off the lake. And so we've started taking them down. And I didn't really think much of this, but at one point my husband's like, smile, and took a picture. He thought this was hilarious that here I am with a chainsaw, breaking down this tree. Like, I don't know. He just thought it was funny. And so I share it with you guys because evidently I thought you might find it funny too. When you're taking down trees. And the funny
Looks like
part
you're about
is
to cut your foot off.
it doesn't. Luckily, no one was harmed. No children, not me, no one. But we did have one casualty, and one of these trees fell on the kids' playground, and the swings collapsed, and the little canopy and the top of it all got whoosh. I wish I had a picture of that. I didn't. We got a video of it, but not a picture. And so now, luckily, now my son and husband have a rebuilding project, and so it ended up working out okay. They're rebuilding, and it's a father-son activity. I will not be participating in that.
This is my dream. I've been watching a lot of felling videos the last couple of weeks. I want to fell some trees.
Come hang out with me. We've got a few more.
Can I come over and fell some trees? This looks like
Please do.
a ton of fun.
This is for Mary's portfolio. She's trying out for the next Texas Chainsaw Massacre movie. I've never seen someone so happy with a chainsaw in their hand.
My wife doesn't
it's
let
fun.
me use a chainsaw.
JC,
I mean, it's a pretty small one. Let's be honest, right?
JC, you think
it's
we'd be
kinda
able to
girl
operate
size.
Hey, Mary, it's not the size, it's how you use it.
What, Strazza?
You think we'd be able to operate this thing?
I don't even want to try, dude. When it comes to chainsaws, I'd rather just hire someone to do it.
I need my fingers. My
You
fingers.
guys have been living on the East Coast way too long. You need to get into the Midwest and get some dirt under your fingernails.
I get dirt
There we
under
go.
my fingernails. It's the chainsaws that I stay away from. You're not listening, Mary. The dirt is fine. It's the chainsaws. That's the one that
This is
dirt's
what
not gonna kill me.
I bucket this in as a high risk activity.
Yeah,
I'm
agreed.
best to stay away from.
Not
High
necessary.
risk, high reward. though.
High risk, high reward. I'm going to get some sunshine in my backyard now.
Yeah, this is great. All right, thanks for that.
Okay.
I got nothing as far as recess. Anyone have anything?
I'm
My
just
corned beef came out great. It was
Oh.
salty, but it was fantastic. So, for everyone, St. Patty's Day is Sunday. Definitely recommend make yourself some corned beef and cabbage and potatoes.
Well done. I actually made one of those last weekend too. So
There
well
we go.
done, Spencer. Good.
I got
good for
two.
you.
Thank you.
I got one. So, over the years, I like to make pork belly, and I just get the big slab, and I just slow cook it and then slice it afterwards, right? But this time around, I got sliced pork belly, like bacon, if you will, but just raw pork belly, but sliced, thick sliced, and I put it in a rack and at like 250, and just like let it cook for a few hours. I put cayenne pepper, garlic powder, plenty of salt, and a little brown sugar. And the cayenne with the brown sugar on the pork belly. Holy shit, man. And then, you know, there's only so much pork belly one can eat. So eat what you want, then cut them up, put them in a like a Ziploc bag. And then when you want a little snack, just toss it in the frying pan for a minute. Woo! That is one money snack.
Jealous.
Nice.
Very, very jealous.
Big East tournament, all the conference tournaments are on today and tomorrow. I'll be watching basketball all day. Maryland Rutgers, didn't they just play?
Correct me if I'm wrong, Spencer Israel. I consider the conference play part of March Madness and the whole bubble in. And is that wrong to look at it that way?
No, you're totally right.
It
starts now.
I was getting abused by these guys the other day. They're like, JC, it hasn't started yet. I'm like,
actually, it already started like a week ago.
That's
already
what
started.
I said.
Right. Yeah.
You guys are breaking my balls. All right.
I guess officially March Madness starts next Wednesday? Yeah.
No, he's saying.
I'm
saying that it already started.
I agree. Officially, the tournament starts this time.
Yeah, the conference tournament is the beginning of March Madness.
Yeah, sure.
Are we going to have an internal
15 years ago
brackets?
Sure. Why not?
15 years ago, what now?
We'll do that. 15 years ago was the end of the UConn Syracuse game. 15 years ago today. 15 years ago yesterday, the game started because it went to the next day.
Dude, so I was in Cancun on spring break with all my friends, and there was like I don't think we had texts, but we had phone calls.
Not in Cancun. Okay,
we were in Cancun. There were like drug wars going on, all this stuff. Like the service wasn't good, I remember. And we kept leaving the bar to call our dads, and they were updating us on the Syracuse UConn game. We kept going out like, did they win? No, it's the fourth overtime now. What the hell's going on? Didn't get to watch that game live. One more I got.
All right,
I've been watching this. Yeah. Hold on. One more. This is important. Been watching a new show on Netflix. It's reality TV series. It's called Full Swing. Absolutely loving it. Have you seen it, Spencer? It's so good. Gotta check it out.
I haven't gotten around to it. I'm going around to it.
So it's basically Hard Knocks, but for the PGA Tour.
Oh wait, no, I watched the first two. And I was like not super into it. So
they follow different golfers around. Like if you're really into Justin Thomas or Jordan Spieth, like they'll do an episode on each guy. It's just really cool to like see. Like even Rose is enjoying because you just see like their everyday lives, kind of like behind the scenes, what these golfers kind of deal with and go through. So I'm enjoying it.
All right, it's Wednesday, 1 o'clock, Hot Corner with Strazza right here on the channel. Thanks to our guest today, Sonu Varghese. Thanks to all of you in the chat for hanging out. Go make some money. We'll see you later.
Adios.
Bye, guys.
I can't take no loss. I don't even know what it